So today we are going to speak about the current situation that we had on the stock market over the past 2 days. We're also going to speak about when would be the good when is a good opportunity to get back in the market. Now I've had a lot of people inbox me. When do you think we should buy crypto? When the best time to buy? So that is exactly what we are going to be speaking about here today. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video and you know of other people that could be gaining from this as well, please feel free to like and share the video with them as well. Now, and as always, just let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, before we get started, it's very important to understand where this had all started. Now, before we get there, I just need you guys to keep in mind that there is a negative correlation between the dollar index, because a lot of people ask, why is crypto also falling? Why is Bitcoin as a standalone falling? But there's a negative correlation between the dollar index and the crypto market or the Bitcoin market. And what a negative correlation means is that when one goes up, the other goes down, and when the other goes down, the one goes up. Now, the dollar index has literally took Bitcoin down. Bitcoin then dragged every other cryptocurrency out there. So precious metals like gold and silver plummeted. The stock market also went back down, and all of these things was a result of this massive bullish move that we saw here on the DXY. Now, it's very important to understand that, but how do we get here? Like, where did this all start in the first place? Okay, because 1 minute everything was fine, not fine, but the stock market was making some bullish price action, like like people used to buy the Nasdaq, and like there was a time where the Nasdaq was just climbing, and all of a sudden, boom, everything is just moving to the downside. Now, the main question is, in order to understand when is the good time to buy the stock market, when is the best time to buy the crypto market, we need to understand what drove this price up and what's going to drive it down, because only these two factors will determine when would be the best time to buy crypto, as well as Nasdaq, the S&P 500, gold, all of that stuff. Remember, the dollar index is only this strong because of high interest rates that's currently being implemented and that will be implemented going forward as well. Now, how they get the interest rate down is exactly what we are going to discuss as we move along as well. Now, why is inflation so high right now? If you do remember, back in January 2022, inflation was sitting at only 7.5. Okay, there we go. Now, the inflation was sitting at 7.5%. Now, at this level, when it was year already, it was at the highest rate than what it was 40 years ago in the US. Now, there was a professor, I think his name was William Hawke, he said that December 2021, that we can attribute rising inflation rates to supply and demand. That's it. So that's basically what he came out to say. He says that we can not blame, but the reason why inflation is so sky high is due to supply and demand. Now, consumers began to spend more, as you guys know, throughout the COVID-19 period, right? Everyone was locked up in their houses, and no one could go out and actually spend any more money. So no one could leave their houses, and they couldn't spend any more money. So everyone was locked up, right? So as the US recovered from the COVID-19 pandemic, so basically what happened, as the US recovered from the COVID-19 pandemic, consumers started spending a lot more money, but significant supply chain problems persisted. So there was still a supply chain problem. So it was still very difficult to get the supplies that was required while in COVID-19 days, because those problems still persisted even as the US recovered throughout the COVID-19 pandemic. So what then happened was production costs were higher, but the supplies of goods was reduced, which led to an uptick. Well, they call it an uptick um, in the market as well. Well, not in the market, um, in the like in the whole process, well, in the inflation process. Okay, then basically, from there, we also saw wages also increased as employees were offered more money. So we saw, if you don't know where to find the wages report, but it comes up with the NFP, which is the wage increase. So we saw wages started to increase there as well, as employers offered more money to retain or hire people. Sorry, companies often have to pass those higher costs on to consumers. So because supply was low, demand was high, you know, the cost of foods had to increase, and as a result of that, the wage had to increase in order for people to keep up with the increase in goods and services. That's what's called the CPI. It measures the, consumer spending in the goods and services. So I'm just trying to explain this to you guys so you can understand. So as time went on, okay, on the 25th, we set with another problem. Okay, then Russia started invading Ukraine, and that also added fuel to the current inflation fire. So what happened was the price of the US oil continued to rise. Okay, with the conflict fueling concerns about disruptions about the global supply and aggregate excuse me, the agricultural commodities have also jumped in the price. So we saw when the whole thing of Russia and Ukraine came out, the prices of oil continued to rise higher. Now, if you think about it, supply is low, demand was high when the US came out of the pandemic, right? Then with that high food prices also came an increase in fuel prices there as well. So the only way to have had fixed this was to quickly get everything reversed. That means the rise in food related commodities will keep consumers grimacing at groceries checkout line for months to come was also being mentioned. So people are still going to, so people are, I almost want to say, working back ways to make up for all that lost time throughout the pandemic, and they are coming out now and they're starting to purchase more. The problem is there's not enough to buy, and you should know that when supply is low and demand goes up, the cost needs to increase with that as well. Now, when that had happened, basically what then happened was Jerome Powell, or not Jerome Powell, it was said that the only way to having to tackle inflation is to hike the interest rates. So how does inflation impact the interest rates? Now, the first question was basically how we got here. Now you guys know how we got here. Now, before we go to point number 2, this is what we saw happen. Global stocks slump on the US inflation. Okay, everywhere you read US stocks slide on data showing US inflation. JSE falls as feverish US inflation. Okay, here we go. Inflation decelerates slightly from, that was the last data. Inflation. The dollar index increases at the back end of inflation. Now, when inflation increases, you can expect the dollar index to increase, and you can expect everything that's negatively correlated with the dollar index, which is number 1, the stock market, number 2, precious metals, which is gold and silver, and then the cryptocurrencies, which is mainly Bitcoin, but Bitcoin then drags every other cryptocurrency with it there as well. Now, the question on everyone's lips is, how do we get inflation down? Because in order to get these things to go up again, right, we need to get inflation to go down. We need the dollar to cool down. How do we get the dollar to cool down? Is we hike interest rates to bring inflation down, to drag the stock market to the upside. Now, to quickly make you understand how inflation impacts interest rates, it's very simple. Now, you've probably heard of the chairperson Jerome Powell. Now, he serves as the banking system's public face. Now, he said in March that he supports a traditional quarter point increase in the Federal Reserve's benchmark in short-term interest rates rather than a large increase that some policymakers have proposed. The Associated Press reports if inflation doesn't noticeably decline this year, as the Federal Reserve expected to, the rate hikes could be larger. Now, it's important to understand that when they hike interest rates, the dollar is going to continue to increase in value. The dollar is not going to weaken because interest rates are high, right? It's not going to happen. It's only when the CPI numbers come down that you'll see the dollar starts losing, not losing, but you'll see the dollar starts easing down lower. And the only way to lower the consumer spending index is to hike interest rates, to encourage consumers to do what? To spend less. But how do they do that when the supply chain is still low? Now, it's also said that when inflation rates climb, interest rates typically follow suit, and we saw that, right? We saw that when inflation started making these numbers, okay, interest rates are starting to make these numbers again. Now, we got an 8.3, which is about 0.2 lower than what we got the previous month, but it's still the worst. Now, we can definitely expect another interest rate hike coming. The dollar's going to continue. The stock market's going to continue to fall. But if we do get next month, if we do get lower CPI numbers, then we can expect the dollar to pull back and the stock market to recover. What you're currently seeing in the stock market is just a correction. That's it. It's just some profit taking. That's it. There's nothing special about what's currently going on. But also remember that, like I said, when inflation rates climb, interest rates typically follow with that to slow the economy and bring inflation down. Now, the Federal Reserve and the Bank of Cleveland explains, if you've ever been onto the website, when the economy hits a low point, way back during the COVID-19, the Fed lowered interest rate to stimulate spending. What that basically means is that when the US went into the pandemic, what happened was the Federal Reserve lowered the interest rates to encourage consumers to spend more. Now, what they do now is, now we've got high inflation. Now they need to bring the inflation down. What do? Is they have to go back to what they did first, and that is to hike the interest rates to encouraging consumers to spend less. And as consumers spend less, the stock market will then recover from the fact that the dollar is going to weaken, and then that will basically bring everything back to normal again. But based off where we are now, there is no pullback happening from what most of you would like to see. And this correction you see on the dollar index, there's nothing for the market to do that and continue higher, because from where I'm sitting and from where you're watching, the Federal Reserve is highly likely to hike the interest rates once again in the new month. And that means another strong dollar to pull through once again. And that means do not look for long-term opportunities to buy the market. The only time you want to get back into the market is when consumer spendings had dropped, not when consumer spendings are continuously going up. Now, I hope you understand what I said, and thank you for your time. Enjoy the weekend, and as always, cheers for years.